discuss this with political scientist and Indo-Pacific Affairs analyst Victor Teo. He's speaking to us from Singapore. Thanks so much for joining us, Victor. So with Brent crude now sliding below $78 after the 60-day US waiver, how much downward price pressure will the market actually face if Iran fully unloads its floating storage over the next 2 months?
Well, in an ideal world, the prices will come right down. But I think there is a lot of feel-good sentiment going around. And because of this, and also because of the anticipated the free Straits of Hormuz, prices should come down. But it hinges on a few things. First of all, the oil suppliers must have the ability to deliver the oil to the respective markets. So here we have still structural conditions that have to be fulfilled. For instance, we need to have a post-congestion period, meaning there must be no congestion in Straits of Hormuz. The ships must be all functioning, and there should be a very cautious kind of clearing of the straits before this can happen. So then there is a question of mines. It will take time to clear the mines, and shipping costs have to come down. So all these have to be taken into account, even if Iran is ready to offload the oil. And we have to bear in mind that the Iranians have always been selling to the Chinese. So for them to try and sell to new buyers, like you're saying, to the United States, it might take a while for this thing to work out. So I don't see there will be a softening of the price, but I don't think it's going to be very quick and very immediate.
So given all those factors you've just outlined, how long will it take for global refinery supply chains to actually normalize all of this?
Well, I mean, there are thousands of ships trapped in the Straits of Hormuz, so I think it's going to take at least 2 to 3 months to clear, for the ships to get back to normal. And for the Straits of Hormuz to be demined, that's going to take a little bit more time. And so all in, we're talking about perhaps something like 3 to 6 months just to get the ships flowing. And this is contingent on the fact that there should be no further fighting. And we all know how fragile the peace is and the state of relations between Israel and Iran. So assuming that there is no more fighting, then we're talking, personally, I think it's something upwards from 3 to 6 months. But for the price to really come down and for things to resume like per normal before the Iran conflict, I think it's going to take more than a year. For the simple reason, because the Gulf facilities have been hit badly, and in order for the prices to come down, the Gulf countries need to be made whole, and those infrastructure there need to be rebuilt. It's going to take a much longer time. So for things to come back down to become normal, and for prices to come back down, I think it's easily going to take more than a year.
Victor Teo, really appreciate your analysis. Thank you very much.
Thank you.